Hello, what's up, everybody? How are you? Hope you guys are doing good. It's another time. This Gatos FX here. I just want to show you what has happened with oil as a pair or as a commodity in correlation with what's going on with geopolitical tensions that we are facing right now. As we all understand that the Middle East crisis, in one way or another, would have a huge impact in the economy, which could perhaps affect the markets as they are moving. But for financial speculators like us, it's an opportunity. Whatever the business is going on, geopolitical issues, we can make money either by going with the trend or going against the trend. But with respect to oily, the analysis that I have done 3 days before, today is Friday. I did this analysis on Wednesday, and I anticipated that price of oil will surge due to all fundamental and the technical factors. Number one, when we go to fundamental factors, we understand that we have this tension in the Middle East, Israel, USA, and the Iranian war. And Iran, the government has announced that to close the Strait of Hormuz, where we know about 20% of the world's oil resources is crossing through that Gulf, the Persian Gulf. Now, with these conditions, perhaps we would have anticipating that oil price will surge. Then coming to technical analysis, here is where now the chart is telling us, like you see, this is where we are on Wednesday. That was a 1 hour's time frame. And this price came from this monthly lower zone where we have had a support. I'll show you later from the monthly time frame chart. And I was anticipating that this price is going to hit this monthly resistance. So we have had two issues right now. It was either price would have continued to surge because the tension in the Middle East was still prevailing, or we could get a little pull down before we push to the upside. So I was watching this oily commodity very much closely, following the geopolitical issues going on in the Middle East. That was number one. But number two, looking at the chart to see how price goes. So here's where the lesson is. With respect of what's going on in the economy, market must give us a retracement. It must give you a discount, because when you want to buy, you better look for a discount price, and when you sell, you better look for the premium price. So this is what I was waiting for, this price to come for this little bit demand and supply zone or support zone, whereby we have had a liquidity flip at this area. If we look at the line chart, we'll see it very much openly. We see this in the only high, we have the thrust up, thrust down. After the break of the structure, then price continued to go to the upside. I was waiting for this price to come to retest at this area, and this is exactly the same happened. What is needed is a little bit patience that you need to have as a financial market speculator or trader. You need to understand the key zone and the major time frame movement with respect to what's happening in the economy. So I'll take you through the breakdown, top-down analysis of how I did analysis for oily in this week, and we can see the price, how it has the price rise. I took the trade, the entry when price gave us a discount to $73,000 per barrel, and look at what's happening in a course of only 3 days. Price has risen from 72 to $83,000 per barrel. So it's a huge surge of price, and of course we anticipate price will continue to go up and up and up. But why I have chosen to call this trade here is because of weekly time frame and monthly time frame. This price has already reached a zone where we have had an historical resistance. See guys, here we have had a resistance in 2023, resistance in 2024, and now we are in 2026 first quarter. Price has reached at the zone where we have had a lot of resistance. But with respect of the Middle East tensions, I'm looking to continue to be bullish only and only if this week candle will close above this area, waiting for the retest, and then shall continue to buy. So I'll be watching it in this weekend to see how gas price moves on. So my little analysis started here from monthly time frame. Of course, market was trending down. You see, market is making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So what do we expect? If sellers were still prevailing and dominating the market, perhaps we could expect to get more lower lows and lower highs, and then price to continue to give the downtrend. But what happened, the moment this price settled at this area, you see we have had an historical resistance, support, impulsive breakup, support again. When this price came at this monthly support zone, there was a lot of indication that sellers' power has been exhausted, and now buyers' power is taking over the market. So with respect, regardless that we could have not having this Middle East crisis, still the price for oil will have rising. Why? Because price reached the support zone, and look at this January's candle. It is a bullish engulfing candle. It engulfed how many months previously? 1, 2, 3, 4. At least a quarter, 1 quarter and 1 month. The last quarter of last year, sellers dominated the market, but they were very weak. January's candle has been able to surpass and close above and engulfing all those 4 candles of the last year's final quarter. Then look at the candle of February. It is a hammer, indicating that sellers tried to sell, but buyers neglected the seller's power. So perhaps we are expecting to continue to the upside. And why I got out of this market at these levels is due to this support and resistance on that are found at this area. So from the monthly time frame, what do we see? Always when you trade, you must trade what you see and not what you think. Look at the conference. We have monthly time frame bullish structure, as I have said, with all the features. Then let's go to look at the weekly time frame. The weekly time frame gave us a very beautiful and a naked shift of the structure. See now, when this market was trending down, it maintained lower lows and lower highs, lower lows, lower highs, lower lows. Eventually, we have had a high high. What does it mean? It means that sellers' power is no longer in domination of the market and buyers are taking control of the market. Now you have 2 time frames moving in sync. They are all talking about the same language. And what is that language? You see, monthly time frame, market is buying. And then weekly time frame, we are also bullish because price is a fractal. What's happening in the higher time frame must also be taking place in the lower time frame. Okay, then I shifted to the daily time frame. And remember, I did this analysis on Wednesday. It was on Wednesday. What I see is that now I'm no longer interested with the sellers. I'm looking for buyers. We are bullish. Market is maintaining new higher highs and new higher lows. New higher highs and new higher lows. Although we have had this strong daily support zone, but because of geopolitical issues that are prevailing, it is very difficult for the right time that we have to expect that this price will have a big retracement or price will seek for a discount. Or it will never seek for a discount when there is a war, especially from the Middle East, right? So I anticipated that, okay, now I'm going to look for buys. And here is where I was. Look, this is 1 hour. I found that we have a very strong bullish engulfing candle, closing, and this is 1 hour's candle, closing above this daily resistance and support zone. So I expect to have more further continuation to the upside. Then let's go to the 4 hours time frame and add more meaning. So in 4 hours time frame, here's where we are. You see this pin bar which came to take our trade. Let me check here. All right. So we closed above this daily support zone, resistance zone, with high momentum candles. Sellers tried to pull the market down. They tried to look for the discount of gas, but price continued to surge because of the reason that I've spoken since the beginning of this video. So when price was here, I said, okay, now we can have a little bit of retracement up to this zone. Remember, price have had facing weak rejections here. We closed it with high momentum to the upside. Price will have to come to the test. So based on 4 hours, we have 2 liquidities. Number one, there is a 4 hours COC at this area and the hidden weak rejection liquidity. For those who took my classes, they understand these terminologies. But the business, I closed it in 1 hour's time frame. As we see here, here's where the business was closed, because in 1 hour's time frame, we have had a very naked and simple liquidity here. You see, this is already high, thrust up, thrust down. We expected to have a liquidity engineering, but price continued to go to the upside, came to retest again as a flip. So I took this flip, and now price has just reached the zone. I just hit my TP. In terms of pips, it's about 1,000 pips, 1,100 pips, only for 3 days. It's good for the business, although it's bad for the economy. We understand the economic crisis that we are facing right now in the world, in the global. But if you are an investor in the financial markets, no matter what's happening in the economy, you still can make money and make profit and do whatever you can. So this is Gatose, and this is zone to zone strategy. See you next time. As the crisis continues, we might pull up our socks. Thank you for watching. Next time.